Ever wondered how the Emerald Isle Island transformed from a land of hunters and gatherers to a bustling modern economy? It's an intriguing tale that starts in the hazy dawn of prehistoric times. When the first seafarers set foot on Irish soil, their existence was defined by fishing, hunting and gathering, a lifestyle dictated by the Ice Age. But as the world warmed up around 4,500 BC, agriculture took root, marking a significant shift in Ireland's economic narrative. Despite the prosperity brought by farming, an economic collapse occurred around 2500 BC, resulting in a population decline. But as resilient as ever, Ireland found its footing during the Bronze Age, with metalworking becoming a cornerstone of the economy. And then, around 350 BC, the Celts arrived, introducing iron technology, establishing kingdoms, and creating governance structures. With the arrival of the Celts and their iron technology, Ireland's economy began to take shape under formal governance. The economic narrative of Ireland took an interesting turn with the advent of the medieval period. As the calendar flipped to the 12th century, a significant shift occurred. The Irish economy, which had been largely self-sufficient, began to orient itself towards trade, primarily with England. The green pastures of the Emerald Isle were abundant with livestock, and the fertile soil yielded bountiful crops, both of which formed the backbone of this trade. Sheep, cattle and crops became the lifeblood of the Irish economy, the pulsating rhythm that drove the ebb and flow of wealth. Each baa of a sheep, each moo of a cow, and each rustle of a crop in the wind echoed the sounds of commerce, reverberating across the Irish Sea, all the way to the bustling markets of England. Yet the economy was not just about livestock and crops. The Irish were skilled craftsmen, producing exquisite works of art and intricate jewelry. Their craftsmanship was a testament to their creativity and ingenuity, adding another layer to the economic tapestry. As the centuries rolled on, the economic landscape continued to evolve. The dawn of the 18th century marked a transformative period in the history of Ireland. The once isolated villages and towns began to connect thanks to the development of turnpike roads. These roads, crisscrossing the landscape like veins, pumped life into the economy. They connected communities, facilitated trade, and stimulated growth. Infrastructure became the invisible hand, guiding the economy towards expansion. The wheels of carts carrying goods turned in rhythm with the wheels of progress. Each rotation, each mile traveled brought Ireland closer to economic prosperity. But this was not just about roads. The infrastructure boom extended to harbors, bridges and canals, further enhancing Ireland's capacity for trade. The 18th century, thus, brought a wave of infrastructural developments that set the stage for Ireland's economic expansion. The medieval times and beyond were a testament to Ireland's resilience, adaptability and constant quest for growth. The 20th century marked a pivotal moment in Ireland's economic history with its independence from the United Kingdom. The birth of the Republic in 1922 served as a double-edged sword. On one side, it marked the dawn of self-governance, an era of autonomy. On the other, the newly formed Republic faced the daunting challenge of building an economy from scratch. The early years were marked by a struggle for survival. Poverty was widespread and opportunities were scarce. The domestic economy was largely agrarian, with little industrial development. The global economic depression of the 1930s further intensified the nation's economic woes. The government's protectionist policies aimed at nurturing domestic industries seemed to do more harm than good. Industries lacked competition, leading to inefficiency and stagnation. In this bleak economic landscape, many Irish people saw emigration as the only viable option. Throughout the 1950s, Ireland experienced a significant population decline, with countless families bidding farewell to their homeland in search of better opportunities abroad. However, the story of Ireland is one of resilience and transformation. By the late 1950s, the government began to realize the pitfalls of protectionism. Gradually, it shifted its focus towards open trade and foreign investment. It was a difficult transition, but one that was necessary. The 1960s marked the beginning of a new chapter in Ireland's economic history. The government's efforts to stimulate the economy started to bear fruit. Foreign companies began to set up operations in Ireland, attracted by its low corporate tax rates and educated workforce. The economic upturn led to the reversal of the long-term population decline. Despite the hardships, the 1960s brought a glimmer of hope as Ireland started to witness an economic upturn. The nation was slowly but surely finding its feet. It was the dawn of a new era, an era that would eventually lead to the rise of the Celtic Tiger. The tale of Ireland's economy would be incomplete without the saga of the Celtic Tiger. This chapter in Ireland's economic narrative began in the 1990s, a time of unprecedented growth and prosperity. In the space of a decade, Ireland transformed from a nation grappling with economic challenges to a bustling hub of innovation and enterprise. The Celtic Tiger period marked an era of rapid economic expansion, where Ireland's GDP per capita soared, elevating it among the ranks of the world's wealthiest nations. This robust growth was not serendipitous. It was the result of strategic policies, targeted foreign direct investment, and the indomitable spirit of the Irish people. As the 1990s dawned, Ireland embarked on a journey to modernize its economy, focusing on high-tech industries and service sectors. The Irish government's commitment to education and infrastructure development, coupled with low corporate tax rates, made Ireland an attractive destination for multinational corporations. Tech giants and pharmaceutical behemoths set up operations on Irish soil, infusing the economy with capital, creating jobs and fostering innovation. This influx of foreign direct investment was a catalyst for change, propelling Ireland to the forefront of the digital age. The country became a global hotspot for tech startups, earning it the moniker of the European Silicon Valley. The Celtic Tiger roared, and the world listened. Yet it wasn't merely about numbers and figures. This era redefined Ireland's identity on the global stage. The nation transitioned from being predominantly agrarian to a thriving modern economy. It was about the metamorphosis of a nation, the evolution of its people, and the reshaping of its future. The Celtic Tiger era was a testament to Ireland's resilience and adaptability. It illustrated the nation's capacity to transform its economic destiny, to rise from the ashes of past struggles and embrace a future of possibilities. The story of the Celtic Tiger is, above all, a story of transformation. It's about a nation that dared to dream, that dared to change, and that dared to succeed. It's about the spirit of the Irish people, their tenacity, their innovation, and their unwavering belief in a brighter tomorrow. The Celtic Tiger era transformed Ireland from a struggling nation to the European Silicon Valley. This is not just a chapter in Ireland's economic history, it's a tale of triumph, an inspiration, and a beacon of hope for nations around the world. The global financial crisis of 2008 was a stern test for Ireland's robust economy. The shockwaves of the crisis reverberated around the globe and made their way to the Emerald Isle, leading to a profound recession. The Celtic Tiger, which had roared with unprecedented growth in the 1990s, was silenced. Property prices plummeted, unemployment soared, and the nation's banking system teetered on the brink of collapse. In the face of such adversity, the Irish government took decisive action. It implemented a range of structural adjustments, including fiscal consolidation measures and banking sector reforms. Although these were tough decisions, they were necessary to stabilize the economy and restore market confidence. The road to recovery was not an easy one. It required sacrifice, resilience, and a steadfast commitment to economic reform. The Irish people faced these challenges head-on, showing the same spirit that had carried them through centuries of change and upheaval. By the mid-2010s, signs of recovery began to emerge. Property prices stabilized, unemployment rates fell, and the banking sector regained its footing. The economy started to grow again, albeit at a more modest pace than during the Celtic Tiger years. But this growth was more sustainable and less reliant on property and construction. The recovery was also aided by a continued focus on attracting foreign direct investment. Multinational corporations, particularly in the technology and pharmaceutical sectors, were drawn to Ireland's low corporate tax rate, skilled workforce, and strategic location within the European Union. In the years following the crisis, Ireland's economy has shown remarkable resilience. It has not only recovered, but also emerged stronger and more diversified. The lessons learned from the crisis have led to more prudent fiscal policies and a more robust banking system. Today, Ireland stands as a testament to the power of resilience and the will to persevere in the face of adversity. The global financial crisis was a stern test, but it was one that Ireland met with resolve and determination. With resilience and determination, Ireland weathered the storm and embarked on a path to recovery. In the modern era, Ireland stands tall, navigating the complexities of Brexit and diversifying its economy. Today, it's a powerhouse in sectors such as technology, pharmaceuticals and finance, attracting global companies with its favorable corporate tax rates. The Irish economy is characterized by strong GDP figures reaching an impressive $529 billion. The growth rate tells a tale of consistent progress, standing at almost 12%. With a population of just over 5 million, the GDP per capita is a robust $105,000, reflecting a high standard of living. Inflation, meanwhile, remains low at around 0.5%, ensuring the cost of living remains stable. Ireland's performance in these economic indicators paints a picture of a thriving and resilient economy, a far cry from its struggling past. The story of Ireland's economy is a testament to the resilience of its people and the promise of a future yet to unfold.